Friends, welcome all for this special edition on international taxation webinar series. CVA India, in association with Zoho and with YouTube, we are dedicated to have series of program on this particular topic on every Sunday. We'll be having eminent personalities, seasoned speakers, international tax experts to handle these sessions. We'll have with us always as a special friend and also a young and energetic expert on international tax from Mumbai, CA J. Joshi. A very brief intro about this young gentleman is definite to be shared. He's a seasoned chartered accountant, and recently he has added to his qualification n number of specialized courses, especially on international tax front. His passion and also profession both are towards cross-border transactions. So along with this younger brother, we'll be taking you together with this beautiful journey on understanding various nuances on international tax transactions. We'll be very practical, not more technical, but at the same time, we'll be dwelling upon intricate aspects on international tax front. Today, on this Shankaranti week, we start this session to understand the first lessons on international tax. So this will be like a dialogue, like a layman will be expecting certain questions on this particular topic. So we will try to appreciate the subject together to take you through the various aspects of international tax. Over to J. Joshi to uh, take us through
Yes,
a particular subject and let us start the dialogue. JJ.
sir. My first question is, what is the first of all is the domestic tax and what is the international tax? So what the terminology difference basically a major difference between the domestic tax and the international tax?
That's a actually, if you give an opportunity, this is the first question I also wish to ask. When I reside in India, I stay in India, I stay in my country, and I earn income in this country. So I don't have kuch lena dena nahi hai outside Mera Bharat. So then I am obliged, obligated, duty bound to pay tax only on my income, which I earn, which is a source from India. So we can call this as a domestic tax. So I stay in India, I earn in India. Now, the kind of transactions that happens beyond borders. I must make one observation here. The number of Indians who have gone outside India. So they say our statistics of our population is 142 crore. I repeat, 142 crore. But how many people have gone outside India? So what we call it as the emigrants. So who go and stay outside India, earn there, but they are born in India. So they may be born in India or their roots will be in India. So this is how the terms are in English, we will say roots are in India. So such immigrants, they go abroad. Now there is a very important statistics. It will be startling that close to, they say, 12 million, 12 million Indians. So meaning 1.2 crore of Indian population. So it's almost 1% of our Indian population. They have gone abroad and they have settled abroad. There are people who go and come back, go and come back. So when I say immigrants, they have born in India and they have gone outside and they have stayed outside India. They have permanently settled outside India. So the External Affairs Ministry, they have given the statistics of 1.2 crore. But there are people who go abroad and come. So meaning they are resident here, but they stay here, they earn here, but they go out and come back like a tourist for business visit, for medical purpose, for going and seeing their relatives. So that number is actually 5x of this number. So that means that many tourists, that many kind of people are going outside. So Indians going outside and coming back. Apart from this, we have the foreigners also who come and settle here. Foreigners who come and then they go back also. So quite the interesting numbers I'll be discussing when we speak about country specific, Singapore, Australia. So then I'll give you quite an interesting number. Now, international tax question will come when people who are abroad, their residence is abroad, they stay abroad, but they have income in India, they have source in India, their investments will be in India, their property will be in India, they will have rental income in India, they will have dividend income from India, they will have interest income from India. Oh, so then the question of international tax, the concept of international tax will come. So I stay in Australia, but I earn from India. Now, which country I have to pay tax? Should I have to pay tax because I stay in Australia? I have to pay tax to Australian government for all my global income, my Australian income, and for my global income. Should I have to pay to Australian government? Naturally, Indian government also will ask, since the income is earned in India, you pay tax here. Whichever citizen you are, whether you are resident here or non-resident or foreign citizen, foreigner, you earned here. So the international tax is such a subject. When you earn money in India and you are resident here, you pay tax. You earn money in India, but you are not resident here. Then also you pay tax to Indian government. But at the same time, will it be taxed in your residence country? It depends upon your tax laws also in that particular country. So that's where this international tax becomes significant. Now, then you will ask maybe a second question. So, should I have to pay multiple tax? So, I'm sure you will not miss that question. Yes, over to JJ.
Yeah. Sir, you have rightly defined whether I have sourced income in India, right? So can you elaborate on the what is the source rules and what is the residence rules to pay taxes in India as well as any of the country outside India?
Absolutely. So, this is actually technically they call it called a situs rule. So, source in one country means they call it as source rule. You are resident in one country, so source is in another country. So if I have not gone outside India, I'm resident here, my source is here, I earn in India. So source and residence both are here, because under any tax laws, whether it is income tax, Indian income tax act, or international Singapore income tax, Dubai income tax, because nowadays Dubai also has started to tax the income earned there. Australian income tax, they have to go by some some concept. Now, what is that concept? So, you have source in that particular country, I will tax. So, no, no, you are resident in this particular country. Wherever you are, you have the source. You are resident here, you have income, pay tax to my country. From whichever country you earn, I don't bother. So, that model is called resident rule. Now, what is source rule? You earn from my country. I'm not bothered whether you hold Indian, you hold my country's passport. You are my citizen of my country, or you are citizen of a foreign country. You earned income in my country. So source is in my country. So government will of that particular country will say you pay tax because source is from my country. So if I have to tax a person, I need a logic. That logic is you earn from my country, you pay tax to my country. This is one logic. Another logic, no, no, no. Wherever you earn, I am not bothered. You are staying in my country, you are resident in my country. I have given you the passport of my country, citizenship of my country, voting rights are given to my country. So then, whatever you earn, whether you have it in your pocket or in somebody else's pocket, it is your money, you pay tax to me. So this is called as residence rule. Certain country follows source rule, certain country follows resident rule. Now, you have to be very clear, JJ, that our country follows which rule. Now, Indian government is very clear. So, if you earn in India, you pay tax in India. This is called source rule. Now, foreigners, they are not resident here. They will come here, they'll earn. So, they have to pay tax to Indian government. Now, I am GKR, you are JJ. We are professionals. We are resident here. So there is a international tax advisory. So we both flew to Australia. We give service there. We earn money there. Source is in Australia, but we are resident in India.
India.
So, so now source is outside India. Now the law says, Indian law says, if you are resident here, even world income, you have to pay tax here. So Indians, India source pay tax here. So that means both the rule are applicable in Indian income tax. So if you are resident
Yes.
also, taxability will be there. Your source in India also, taxability will be there. So quite, it is both the concepts are intertwined, interlinked, and both are kept in our Indian income tax. So that is why Indian tax laws are will be at a higher pedestal. So whether you want to call it as more complicated, I'll only use a word called it is kept at a very high pedestal, and because of that, the challenge in understanding this law will be quite wide. Over to JJ.
So after the first and second question, we have to conclude it that so India is the both the tax regime. India is tax as per the source rule as well as the residence rule as well. So India have the both the tax on the both the source of income. So sir, so here if we continue with another example, whether we have flew through the Australia to provide the service in the Australia, right? So we have to pay tax in Australia and we have to pay tax in India both. So it is a called double taxation for the particular to you as well as to me. So is there any treaty between the countries or any agreement between the countries? So I have heard the one concept called DTAA. So who is this? Can you enlighten us through what is this thing?
Good. So actually, now only we are so far we have only planned the tour. We took the ticket. Now only we are boarding the train. Now only the train
Yes.
starts. Oh, you have asked a
Yes.
very good question called treaty, double tax avoidance. So good question. Now only the train is slowly starting. See, when I am resident in India, I earn in India, doesn't matter. I will pay tax only to Indian government. But when I have an income outside India, so I have a source in Australia, definitely Australian government will charge a tax on that source. So generally, almost all the countries, there are exceptions are there. Majority of the countries, they go by source rule. Income earned in my country, I have the right to do tax. So that is the logic of every government. So Australian government also will tax my income. But I am resident of India, and as per the Indian Income Tax Act 1961, I have a section 5 called scope of total income. In the scope, it very clearly says you are resident and ordinary resident in India. Indian income also it is taxable. World income also taxable because you are यहाँ जक मार के क्यों बैठ रहे हो? If you earn income in Australia, go there. So you are sitting here and taking resources of Indian government, and you have the voting rights of Indian government. You have the you enjoy the Indian benefits here. So you call yourself an Indian. So therefore, world income, global income also taxable here. But I will tell my government G, I've already paid tax to Australia. So it doesn't matter. You pay tax here also. So then what happens? Both the countries I will pay on a single income tax in two countries. So single source, but taxed in two geographies. In two geographies, Australia also I will pay tax, and in India also I will pay tax. So this means double taxation. So that means is it good? Will it be encouraging? No, it will not be encouraging. So that is the place where governments came forward, okay, for transaction between two countries to happen. So let us enter into a treaty. So treaty is an agreement. No, no, no. I will tax, you don't tax. No, no, no. You tax, I will not tax. There are various models in double taxation. It is called source country alone will tax. The residence country will not tax. Residence country alone will tax. Source country will not tax. So how this double taxation will be avoided? So we have various models in this. So we call it as sometimes there is a concept called tax credit system. So I will pay tax in Australia, and I will also pay tax in India. Whatever tax I have paid in Australia, I will take it as a credit and subtract it. That's it. So it is called tax credit system. So that means I need a proof that I paid tax in Australian government. So this agreement will say, "Oh, have you paid tax there? Good. I will give credit to you." So there is one more concept is called that is called exemption system. Oh, you are that is already tax there. I'll exempt you. It is not taxable. So Indian treaties, they generally they don't have this exemption concept. But so if for example JJ and GKR we handshake, there will be only one handshake. If there are three people, three handshakes will be there. GKR and JJ one handshake, GKR and the third party second handshake, third party and JJ third handshake. Now, if there are two countries, one handshake. Three countries means three handshakes. If there are 30 countries, how many handshakes? So that many number of treaties, agreements will be there. India alone, in the global scenario, India is one country, China is one country, Afghanistan is one country, Australia is one country, Japan is one country, Singapore is one country. So like that, how many countries are there? They say 195 countries. And of course, from India, there is one Samya. Okay, so he is actually a god man. Okay, so from Tiruvannamalai, he also claimed that he has his own country called Kailasa. Okay, so then we can say it 196 or 197, but we have not crossed 200. So officially, UN has announced, United Nations has announced, globally there are 196 countries. Now, India is one among these 196 countries. So, have we entered into treaty with all 196 countries? No, because friendly countries only will enter treaty. Technically, we should have entered into treaty with our neighboring countries. Who is our neighbor? So now, why leave alone Pakistan and Bangladesh? Our own neighbor, we will not talk properly. So only with the distant people. See, Jay Joshi is a very distant person. Maybe if he is my neighbor, he will not talk to me. So because he is in Mumbai and Chennai, dost hai. So we are not in good talking terms with our neighbors. That is what in everywhere it is the same. So that is why treaties among the neighboring countries are not there for India. So We have Nepal is there, Pakistan is there, Bangladesh is there, so Afghanistan is there. So there are some like seven sisters states are there. We have seven countries with whom we have never had any treaty at all. But we have already entered into double taxation treaties, agreements with almost 90 plus countries. And those treaties are also been updated also. Every now and then when our Pradhan Mantri goes to that particular country, so there will be new agendas will be there. The treaty will be, and that particular Pradhan Mantri, this Pradhan Mantri, both of them they will sit. There will be a press conference that flag of both the countries will be there. Both of them will sign something. What is that? Treaty renewal, new classes will be added, old classes deleted, exemption method will be discussed. India is one country, they'll always say, no, 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 never will exempt. We will also tax, but since we are friendly, we will give credit. So India is one country which majority of our treaties, I have never seen an exemption in the double taxation avoidance agreement. Maybe JJ can supplement that, but I have seen only the tax credit system only prevalent in the DTAs which India has entered into the other countries. So I understand there is only one agreement with one country where that exemption system is followed. So over to JJ.
So basically, in the DT double agreement, there is India is follow the credit rules. So what is the India? What is the basically agenda of the Indian government? We have to divide the tax rate. So suppose from the India is follow the residence rules here, and that and as well as source rules here. So India say if I so if we take an example of the interest income. So suppose a foreign company have given loan to his Indian company in India, and he pay interest to the foreign company. So say, so if you pay tax, so interest is received in accrued in India because the payment is given by the Indian company. So I have right to receive a tax on this part. So I will write up to the certain amount of tax. So they will say in your country you will interest charges 25% of tax. So I will charge only 10% of tax. Remaining 15% of tax it is charged by you. So I will charge only 10%, and you will charge the 20 a whole 25%, and you will get credit to the 10% of that in your part. So this is how the treaties work.
Excellent.
Over to you, sir.
Well, so the double tax part is over, agreement part is over. So I am waiting for your next question, JJ.
Sir, actually, basically, our conversation is around more on the resident status. So, I am a resident in X, I am resident in Y country. So, how we determine the residential status if I am a person, right? So, how I determine residential status, whether I am a resident in India or I am a resident in the US, how I am determined? Is there any rules or any prescribed guidelines to determine the tax residence rules?
Yeah. I'll say this is a fundamental question. So because I'll say this is you want to enter the Jurassic Park, then there is a gate you have to open. So then only there will be a very big board called Jurassic Park. Then the gate will open, so you have to go inside. So the gate for the international taxes, the residential status. Only when you determine whether I'm resident or non-resident, then only the next question will start. Okay, because in mathematics, especially in algebra, when you do the drawing of x-axis, y-axis, there is a starting point for x0, y0. From there only I can start. So I need a starting point. So the starting point is actually the residential status. So whomsoever, so a foreigner comes to India, I will apply. Okay, are you resident in India or non-resident? Indian who is in India. Okay, so are you resident or non-resident? I have to do the test. No, what? How do I do that litmus test? It is for a year. We call it as a financial year, April to March. For that year, he should have stayed in India for 182 days, which is nothing but 50% of 365 days. So in year 365, so 50% is actually 182.5. So if he is crossed 182 and above, so if he stays only 181, he is not a resident. He becomes non-resident. So that is why somebody will plan like this. So 181 by 2 is actually 90 days and 90 days. So what people will do is the one April to March and another April to March. So 90 days in 1 year, 90 days in another year. So January to March and April to April, May, June. Continuously 6 months they will stay in India. But 90 year, 90 year. So then what will happen? Technically in both the years they'll be non-resident. Because for a year 90 year, for a year 90. But maybe continuously they would have been stayed for even 185, 186, 190 also. 200 days also. Okay. So 100 year, 100 year. So that is also would have been possible. But in 1 year they have not crossed that 182 days. So that is the criteria for residential status. Now, if I am not a resident, I am non-resident. Because this is the place where Indian Income Tax Act says, oh, you are resident. Then source rule and the domicile rule, both are applicable. Domicile means residence. So you are resident here, you earn here, pay tax here. Now, you are resident here, you are domiciled here, but you earn outside India. For that also you have to pay tax here. That is for world income. So I am resident in India, but I earn in Australia. For Australian income, taxable here. But non-residents, if I'm non-resident, income earned in India, source in India alone, I will pay tax to Indian government. Non-resident means I stay somewhere else. I am in Australia. I'll go back to Australia, I earn in Australia. Should I have to pay tax for that? No. So the source, residence and source is as a very important connect. So if I'm resident, tax him. If I'm non-resident, okay, source alone tax him. So because he is resident in some other country. So very interesting aspect is this residential status. That is the anchoring point to tax and income. And even for nowadays, there is a lot of discussions going on in the media because there are people who go abroad, earn, they don't bring the money here. Since if I have to bring the money here, then I have to use the banking route and all. They'll earn the money there, they'll invest the money there itself in Australia, Singapore, Dubai, Oman, Kuwait, Qatar. They invest there itself in some company, in equity shares, in land and building, in apartment. They invest there, come back here. Again go, earn, invest there, come back here. Now they are resident in India. Recently, income tax return has made it very clear. So those who are resident here, they have foreign assets. They have to disclose their foreign assets. So because when they have foreign assets, they would have earned income, then they would have acquired that. If they have foreign assets, they will have foreign income. That they should disclose here. So two things they get. They are actually they are actually caught in a web. One, for that investment, what is the source? And you are resident here, you have not paid tax for that. Second, for that investment, you would have earned additional income. Maybe if you have invested in equity shares, dividend would have come. Invested in deposits, the interest would have come. Invested in property rental income would have come. So that also you have not disclosed because you are resident in India. You are resident here, you have assets outside India. So there will be double, it is a double-edged sword. For the source also I have not disclosed. The income on that asset also I should have disclosed. So both this. So that is why current 2025 government of India is very, very strong in identifying those because India is now has become almost very close to becoming a superpower. So we are India and China is the two superpowers as far as the entire globe is concerned. That is why last year we had the G20 meeting in India, and very important is the informations are shared. Okay, because passport numbers are there. So immediately with the passport, the info data are collected, and the Indians who travel abroad, their data are shared to the respective countries. Any assets transaction which they do in that particular country are collated and shared to ministries, especially external ministry. And external affairs ministry, they share with Ministry of Finance. So they have already a lot of information with them. So they are only waiting for the respective residents to declare that assets and income in their income tax return. So that is where residential status becomes very important. So thank you, JJ, for bringing out this important question.
But sir, you are talk about the residential for the individual. Suppose I have, if I have a company, right? Then how do I determine my residential status? Because the company is a separate jurisdictional person. It is a, not the
Yeah,
individual. So how can I decide ki whether the I will be resident of the country X, I will resident of the country Y. So then
good question.
what? Then
Good question. Actually, this is a place where I must say version 1, version 2, Income Tax Act, they have actually matured because there is a global terminology, there was a Desi terminology, there was a Pardesi terminology. Now, what is a Desi terminology? So, company cannot run on its own. Company can run on its own only by people who control and manage that company. Now, where that people are there, how that control happens, how management happens. So, this is the terminology which is version 1 terminology, though Desi terminology. But Pardesi mein, across the globe, they don't use this term called control and management. They use a word called the effective management, and which is the place of effective management. So POEM, place of effective management. So it is technically control and management in what we were using in our Income Tax Act earlier called as C&M, control and management. In globally, they use a term called place of effective management. So sometimes it will be a country incorporated in Singapore. It is easy to incorporate a country in Singapore. Okay, provided you have the KYC. Within 1 day, 2 day, you can incorporate a company. Then they'll open a bank account there. They'll come to India, sit in India, and from India only they will be sending money there. From that money, they from here only they'll make the payment. Here only invoice will be raised. Here only purchases will be made. They will take the stock here, keep the stock here. From here only they will do the export. They'll import to India, export to India. So India only will be an office, but the company will be in Singapore. Bank account will be there. Maybe one more bank account I will open in Chennai or Mumbai or Bangalore. So I'll just keep it for my, which is like a branch office. That's it. But my main office is in Singapore. So then Singapore is only an office. It's only an address. I don't do any activity there. Effective management I only do in India. Place of effective management. So these companies and all, they decide their residential status. So if a company is incorporated outside India, they are a foreign company. So naturally, foreign company is not a resident in India. Now the foreign company also become a resident in India if the poem is in India. That is called place of effective management is in India. The place of effective management, we have various factors: office, bank account, major transaction, board of directors meeting, so financial decisions taken, operation decisions taken, various criteria. So we'll discuss many stories in that. Poem is one concept where we will discuss with many examples. And in this uh, webinar series on international tax, we'll only discuss with examples, with the scenarios, with the cases, with illustrations, so that we understand how the transaction happens, how cross-border transaction happens, how the applicability of the provision happens. So that will be the driving point in our discussion. Over to JJ.
Sir, actually, we have the go on still currently go through the residential stage of the company, right, as well as the individual. So, is there a separate rule for the partnership firm or AOPBOI, or if the same concept is applied to
Oh,
all
that's
of
a
the
good.
other there?
Absolutely. Even for Hindu undivided family, association of persons, even partnership firms. So we go by this concept of control and management only. And only even for because this HUF is also one place where because HUF is driven by the manager of the HUF, that is a Karta. So Karta becomes an individual, so that individual 182 days model will apply to Karta. So if Karta is resident, HUF is resident. But except HUF and individuals, that is why even if you look at the recent amendment which has been made in capital gains, only for individual and HUF alone, the indexation benefits was given. For all others, indexation benefit is not there. So this individual and HUF, they go almost together. The slab rate is applicable for individuals and HUF, but 115 BAC section and all this latest, this by default regime, the new regime and all, they've extended for some more. But organizations, generally organizations, like AOP, associations, trust, your company, partnership firms, LLPs, all these we only go by this control and management. And the Pardesi version is the poem management, the place of effective management. So this is applicable for all. So we will discuss in greater length in the coming sessions by taking individual examples and illustrations to appreciate the applicability and the various challenges in with respect to those transactions. Over to JJ.
Understood, sir. Sir, actually, I have heard the one concept called the what is the person of Indian origin. So there is a dilemma I have. Where can I the residential status, right? So because I am a resident, so there is the person of Indian origin is the same person. Is a resident of India, or what the terminology defines for the person of Indian origin?
Well, so one thing we let us be very clear about. Okay, so if I am born in India and I should first call, I have to bring a term called citizen here because this person of Indian origin and citizenship, there is a connect. Residential status, citizenship, person of Indian origin. So these three I will give a clarity first. Now, uh, Gopal Krishna Raju, I can be resident of two countries. Oh, is it? Because 365 days. So another country can have a same 182 days concept. There are certain countries which are 90 days concept also. If you are 90 days in that country, you are resident. So I will be here in 7 months in India, 5 months in that particular country. So I will be resident in both the countries. So residential status, I will be resident in two countries. Okay, now this is also possible. So now come to citizenship. Now what is called citizenship? So citizenship is a concept where don't connect this with residential status. So, but to decide residential status, citizenship is one of the criteria. Okay. To decide residential status, citizenship is one criteria. Now, what is citizenship? Gopal Krishna Raju, I am a citizen of India means I hold Indian passport. This is one example to say that I am an Indian citizen. Now, India became a republic on 26th of January 1950. Now, anybody who are born between 26th of January 1950 to 1st of July 1987, okay, by birth, they are citizen of India. If they are born between these 2 years, 1950 to 1987, by birth, they are, if they are born in India, they are a citizen of India. Number one. Number two, from 1987, 1st July to 2004, 3rd December 2004, because Citizenship Act got amended. So there they said, even if you are not born in India, if any of your parent are born in India, then that means if any of your parent are citizen of India, then you are also a citizen. So I am not born in India, but my parents, any one parent is citizen of India. So then I am also a citizen. Then what happened? No, 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 no. From 2004 onwards, Citizenship Act was amended totally. They said both the parents should be citizen. If you are not born here, only both the parents are citizen, then you will be given the citizenship. Otherwise, you are not eligible to get a citizenship. So this is the fundamental change with respect to citizenship. Otherwise, I will not get the citizenship in India, voting rights are not there, passport is not there for me. So many people who come to India, they they are foreign citizens. They have become foreign citizens. They would have settled in US, UK, Singapore, Australia. They would have got that citizenship, meaning they have become the passport holder of that country. They have gotten a green card holder of that country. They have become the voting rights is only in that country. They don't have voting rights here. Okay, no voting rights because they are not citizens. Then they are called foreigners. They are called foreign citizens. Okay, but their Indian origin will be here. Their roots will be here. Now, what do you mean by roots? They are citizen of India, erstwhile citizen. Sometimes I will even have dual passport also. I will have Indian citizenship and foreign citizenship. I will have two passports. Is it possible? So generally, certain countries permit dual citizenship. Certain countries permit. No, no, no. Because we don't have population in our country, so we will give citizenship in our country also. You be citizen of India also. With very few countries. For example, Maldives, and the population is very less. So some countries in West Indies, okay, Papua New Guinea. So some of these countries where the population is very low. Greenland, you go, population is very low. So there they give citizenship. If you are citizen, other country also they will give. But in United States of America, if you have to get the citizenship, you have to forego the other citizenship. If you are already holding that citizenship in India, to forego that, then only US will give the citizenship to you. So countries like US, UK, Singapore, Australia, they will not give Japan. They will not give you. They will not consider giving dual citizenship. You forego that country, I will give citizenship. So now either I should be born in India or my parents should have been born in India. Anyone, my dad or mom, or my grandparents. So that is why they say four generations. Even in HUF also four generations are considered as one family only. So myself, either of my parents, two, or my grandparents, they are four, or my great grandparents. So my great grandparents means my grandparents' parents. So that means for me, 2 into 2 is 4, 4 into 2 is 8. So 8 plus 4, 12, 12 plus 2 is 14. Any of the 14, if they are born in India, then I can claim myself a person of Indian origin. Or I may be a foreign citizen, but I am married to an Indian citizen, or I am married to a person of Indian origin, then I can claim, the foreign citizen can claim, I am a person of Indian origin because my spouse is a person of Indian origin. So this person of Indian origin is so big.
Understood. Sir, I have also the one another concept called OCI. So it is linked with the person of Indian origin, or it is a different altogether regime.
Oh, that's a good question. See, there are certain countries, they use a term called OCI. Certain countries, they use a term called PIO. Okay. So now, for example, person of Indian origin, PIO card. Okay. So you go to citizen, you go to Singapore, sorry, you go to Singapore. So Singapore, you are actually you have come from India to there. Malaysia, there are many Indians in Malaysia, many Indians in Singapore. Okay, so Malaysia is a separate country. Thailand is a separate country. Vietnam separate country. Singapore is a separate country. Many Indians are settled there. Now, question is, uh, these people they have got the citizenship of that particular country. They are foreign. They are foreigners. So as far as India is concerned, they are foreign citizens, but they are Indian origin. PIO. So sometimes India will give a PIO card to them, person of Indian origin card. Okay. Now this person of Indian origin card, over a period of time, it has become OCI card, Overseas Citizen of India. Okay. Now overseas citizen of India. So meaning these certain countries they give a OCI status, certain countries they give a PIO. PIO is from an Indian perspective. So PIO card is for a foreign citizen. You come here, no, no, no. I want to tell my country that I am from India. You give me a PIO card. Now, who will give a PIO card? Ministry of External Affairs will give a PIO card. Okay, good.
Yes. Sir, also I have heard the one
That
concept called
OCA
the
card
deemed
concept
resident.
is gone now. That was an old concept. They don't give now OCA card. It's only PIO card.
Understood. Sir, there is a one also concept called deemed resident. So I have, if I some income earned in India more than X amount, it is a considered as deemed amount. So can you enlighten us that what is the deemed resident part
Oh,
and its implication?
well, I think this is a very, very important question. See, now you have gone from a resident, you have gone to a foreign citizen, and foreign citizen, he will be Indian origin also, and the person of Indian origin card and all, our Minister of External Affairs, they are giving. Now, I have a friend who is in Singapore. Okay, and they are actually they are prohiters. Prohiters means they actually take care of the religious rituals in the temple in Singapore. Okay, so they are one Vainava temple is there in Singapore, Lord Venkateshwara's temple. So they are settled there. So my good friend and their father and all, they take care of the temple rituals and all. Their family, everybody is settled there. But they have income here. So they are not, they have become PIO, person of Indian origin. They have become foreign citizens. They have become citizens of Singapore. But they have property here. They have investment here. They have land here. So that gets income for them. And believe me, annually their income is almost some 80 lakhs to 90 lakhs. 80 to 90 lakhs. So substantial money. So and the 80 to 90 lakhs is after all expenses, I'm telling you. So it is a taxable income. Taxable income. So close to a crore is their annual income, taxable income. So now they are settled abroad. Okay, they are PIO card holders, but they have income here. So Indian income tax thought it. Okay, you have substantial income here. You don't stay here. Okay, that means sources in India. You are a foreign citizen. No, you are a foreign citizen, but you are a person of Indian origin. So then, anybody you are, whether you are a person of Indian origin, you are a foreigner itself. You have no connect to India, but you are a foreigner. But you have Indian income, substantial income. Now, what is this substantial income? At least monthly you earn 1 lakh plus. So that means annually 12 lakh plus. So it is not 12 lakhs. So they have put a number called 15 lakhs. So once you cross that 15 lakhs per annum, okay, you will be not a non-resident. You are not a resident, but you are non-resident. So, but in between this, I will push you to the residential status. That means you for the limited purpose of income tax purpose alone, you will be treated as dividend. You will be treated as a resident. That is why they are called as deemed resident. So they are non-resident, they are foreign citizens, they don't stay in India. Okay, but even then they have substantial income. Since they have substantial income, so income-based residential status. See, normally because source is here. Okay, source is here. But you may ask a question. Okay, whether deemed resident is relevant for double taxation, avoidance agreement, there and all irrelevant. Only for domestic tax purpose, they are considered resident. They are considered deemed resident. Only for domestic tax, not for international tax. For international tax, stay. That's all. If they are not staying here, they are non-resident. So for international tax purpose, they are non-resident. For domestic tax purpose, they are deemed resident. They are not resident. They are deemed resident. Look at the dichotomy. Okay. For international tax, they are non-resident. But for domestic tax, they are deemed resident. So I must really appreciate JJ for bringing out very interesting questions and making today's session a mark by starting with a wonderful concept clarity on first lessons on international tax. Let us take these lessons forward, this basics to the next level, and every week we'll try to explore new areas with examples with more clarity, so that more transactions, especially cross-border transactions. We'll also have a similar sessions on FEMA related topics also, and connect with the international tax, and thereby we'll make this session more vibrant and liked by all our participants. Thank you, JJ, and see you next week, same time for yet another episode. Thank you.
Thank you, sir. Sir,
Yeah, you want to say something?
no, no, sir. It is
Thank
perfectly fine, sir. Thank you, participants, and please support us and enjoy your learning as well.